Hello everyone and welcome to this video. In this video I would like to give an update on gold. If you remember, back in 2019 I made an educational video about gold, in which I went through some technical indicators which pointed towards a selling bias in gold. Now that is almost few months since that video and we're in February 2020. Should I change my position to a buying position, or should I still stick to the selling position I had before? In this video I will go through another series of technical indicators, and we will reach this conclusion that it's still a very good idea to have a selling position on gold. From a fundamental perspective, it might be a very hard thing to digest with all of these political crises and coronavirus going on. Having a selling position on gold might be a tough thing to do. That's why I sometimes say you have to have the guts to sell gold. But as I mentioned before, fundamental analysis is usually worthless, and the charts are your best friend. So let's move on to see what we have in the charts. So over here you can see the monthly chart for gold. So in this first slide I want to go through the first reason why I'm bearish on gold, and that will be the Elliott waves. So hopefully many of you know what the Elliott waves are. Very briefly, if you can see this very massive downward movement, this can easily be labeled as a 5-wave impulsive movement to the downside. This is wave number 1, wave number 2, wave number 3, 4, and finally 5. What happens after a 5-wave movement to the downside is usually a correction, which we can see over here. A, B, C, and this is called a zigzag. According to Elliott waves, whenever you have an A, B, C zigzag, what will happen is you will have the previous trend to resume. So if the previous trend, the larger trend, was downwards, you can expect the larger trend to resume from this and go to the downside. So this is reason number one why I will be bearish on gold at this time. Reason number 2 is the famous Fibonacci levels. So as you can see over here in the monthly chart of gold is currently fluctuating between the 61.8 and the 50% Fibonacci levels. So this is a very good area, a major resistant area for gold. So when you're stuck in between these two levels, I think it's a good opportunity to sell. Both the Fibonacci 50%, which is this one, and Fibonacci 61.8% are very notorious for being a good levels to catch up on trades, whether it's sell or buy. In this scenario, we're looking for a selling position, which is very well favored at this point. So you see that this was in August and this is now February. In the past few months, gold has almost moved nowhere. It was just stuck between these two. So this is reason number 2 why I will be bearish on gold. Reason number 3 is over here, one of my favorites, which is the MACD, or moving average convergence divergence. You can see it over here. So this was back in August 2019, which I made my first video, and this is right now. If you look to this high over here in the MACD, this is the corresponding peak. We had a new high in February, in January 2020, and this is the corresponding peak in the MACD. So although we made a new high over here, the peak in MACD went down. So if you connect these two together, you will have this line, and if you connect these two peaks together, you have this line, and this is called divergence. So divergence is also a good indicator that most likely gold will go down. Let's go to the next reason. So this is reason number 4, which is called the stochastic indicator. So the stochastic indicator over here, this is again the monthly chart for gold. As you can see, gold is right now trending in the highs of 2020, and at the same time, this is the stochastic indicator. It's moving in almost the overbought area. So whenever gold is overbought, it's a good potential to start going down. As you can probably see over here, it was overbought and then it went down. Or in other places like over here, that it was overbought and it went down. So these were the 4 reasons why I favor selling gold, but as you all know, with every trade selection should be some safety measures. If the trade goes in the other direction, when should I get out? With various models of calculating stop loss, I have calculated 3 different stop losses. Depending on how much risk you want to take, you can define your stop loss. So stop loss number 1 is almost at $1,690. Stop loss number 2 at $1,700 $97, and stop loss number 3 at almost $1,922. So if you are a very risky trader, you might put your stop loss at the highs over here. If you want to take less risk, you will probably put your stop loss over here. Usually the rule is the further the stop loss, your lot or your trade volume should be lower. So if I start selling gold at this position and I put my stop loss over here, I would trade with a higher volume, for example 1 lots. But if I put my stop loss over here, I prefer to cut my volume to 0.5. Why? Because in case the trade goes in the other direction, not in my favor, it goes up, if I have a lower lot and at the higher stop loss, the damage will be less. So on the other side, where should I come out? So if gold comes to the downside, if gold resumes the bearish trend, so I will have some profit, but when should I get out? So I'll calculate different take profit areas, number 1, take profit number 2, and take profit number 3. So take profit number 1 is at $1,335. So if you sell right now, gold is about $1,570. So all the way down here is almost maybe $240, which is more than like 12-13%, which is a big amount of profit. In case this happens. And the reason that I chose this level for take profit number 1 is this moving average. So 100 weekly or 100 monthly moving average is a good area of support for gold. So if gold is going to bounce back, it will probably happen from this area. So if I want to take a lower risk and get out of the market as soon as possible, as soon as I have the least amount of profit, this will be a good area to jump out. But if I'm looking for more profit, if I believe that gold will go much lower, I can put my take profit at $1,000, $1,042 over here. And if I want to have more risk, I can put my take profit down here at about $800. I believe gold has the potential to go all the way down to $1,000 or even $800. However, depending on what type of trader you are, you can select what type of take profit you want. The other way of doing it is doing a stepwise pattern. So when it reaches at this level, you can cut some of your trades, get out of some of your trades. Another half of the trades you get out of here, and the remainder you get out of here. So this stepwise pattern is something else that you can do. So the other thing I can mention is how can you sell gold. So one way is doing Forex. I do understand that Forex is foreign exchange. However, Forex brokers have gold in their instruments, so you can easily open a Forex broker and start selling gold. And actually they have good leverages, and with a good leverage you have a good opportunity to sell gold. The other way that might be more accessible and more easier for most people is using the stock market. So if you look in the stock market of each country, usually there are ETFs that are bearish gold. So you can look for these and search for bearish gold. Just keep in mind that we're talking about gold and not gold miners. So ETFs that are bearish gold, for example, daily 2x bearish gold. So there's different types of them. You can search for them. Just remember gold, not gold miners. So that's about it about this video. So overall, the conclusion for me is it's a good opportunity to be bearish on gold. Remember, this is just an educational video. I want to emphasize how much technical analysis can be a good thing to pick up the right trade at the right time. Fundamental analysis, in my opinion, is not that much helpful. With all of the stuff going on, you never know what's going on, what will happen. But the best trend for you is the charts. Numbers never lie. So go with that, and I think the more likelihood you will have some profit rather than sticking with fundamental analysis. Before I finish, I want to point out to this course that I made. So in this course, I go through some basic review of some basic information, but more importantly, I point out some indicators that I believe are the best indicators in order to spot a great trade setup. So there's no like one single way that is the best, but based on my experience, these selection of indicators have a good probability of pointing out the best trade opportunities if they are used at the proper time in the proper way. So if you're interested, you can see in the description below there is a link to this course. It's named All You Will Ever Need to Master Trading, and if you would like, you can have a look at it. There's also a free preview available. That's about it for this video. Thank you for watching. Do not forget to subscribe if you do not want to miss the next video. Subscribe and hit the notification button. Thank you so much. See you in the next video.